Hey, what's up, everybody? This is Evan Carthy from evancarthy.com. Today, we are going to look at the S&P 500, the E-mini futures contracts for September 2020. Today is August 16th, 2020, 4:37 p.m. Central Standard Time. Market's fixing to open here in about 23 minutes my time. So I want to get this out here real quick, see what the market did last week, and then what I think is going to happen in the near future. Today, this is just going to be the S&P 500. I think some of my videos were going a little bit too long, trying to cover Dow Jones and Nasdaq and all that. So we'll just when I do make videos, we'll just do one at a time, focus on those. So anyways, what we're looking at right here is 5-minute chart, the S&P 500 futures. For me, let me explain what we're looking at right here. So each of these yellow dotted lines going vertical on here, those are just the daily breaks for when the market closes at 5 p.m. Central Standard Time, and then when they open, a minute later. And the black lines is the daily low and the daily high, and I'll explain why that's important here in a little bit. And then this big blue line run through right here, this is just the 800 EMA, or 800 daily moving average using the exponential, and I'll explain why I have that on here as well. And so what we're looking at from last week, so there's Friday, Thursday, Wednesday, Tuesday, Monday. You can see price open about right over here, close a little bit north of it. So for all intents and purposes, it was just a range week is all it was. And so we'll see what's going to happen here upcoming next week. And then all these numbers I have on here is basically what I've been doing is something that's been helping me when I'm looking to take these retracement type of trades. Is all I look for is a 5-legged wave move from an Elliott wave move. And it helps me keep me on the right side of the trade more often than not. That's one thing I had been looking for. And so this goes along with the way I've been trading and seems to work out well. Now these ABC moves, all those corrective waves and all that crap, I have no idea. I have no idea how to incorporate that in there. I'm not focused on that. I'm just focused on this thing right here. There's a lot easier to spot, and all those other corrective waves are just crazy. So all I do is confuse me, so I don't worry about those. But basically, all I look for is one thing that I do like looking for is when price blows through this 800 EMA right here, that blue line right there, what this signifies is that this is probably going to be a 5-legged wave right here. And so how I do it is I'll just take, using this swing low down here, I'll just drag that up to the swing high. So then when you can see price retraces back down right here and hits at least the 38% right here, well, that initiates a trade right there and locks it in. So there's that swing high, came down there and hit the 38%. So even though price came slightly back up right here, it never hit my exit I'm looking for at the 1.146 Fibonacci extension level. So we just leave it alone, and price came back down, waffled back around, then finally came up here and hit that little target area up there. So then what I do is I drag my Fibonacci retracement level up and see if it's going to come back and hit the 38% level. You can see it never did. So what that signifies right there is that the market has gone from a traditional measured move to now it's gone to or is blown out past it. So what you do is you then take, or what I do is I take my Fibonacci retracement level, the former swing low, and move it up to that next swing high, and then we just attach it to the top over here and wait for price to move down for it to come down and hit the 38% to lock it in. There it did, came down and hit it. Now this is a trade I'm looking for right here. It's obviously don't work 100% of the time, but I just need it to work at least 50% of the time for me to make money, and here's the reason why. Because what I'm looking to get in on is around either the 50% or the 61.8. I prefer the 61.8 because the risk-reward ratio is even better, but sometimes you do miss a trade. So usually I get down to 50%. If I want to get at the 38% level, that's extremely aggressive, and I really don't do that too often. But anyways, you can see price came back down, hit the 50, went up a little bit, came back down, hit the 61.8, and then my exit is just right here at the 1.416 Fibonacci extension level. And then my stop loss is just below this, is a little bit below the 78.6 Fibonacci retracement level right there. So as you can see, saying I got in at the 50%, have my exit right down around here. You're looking at about 30 ticks as loss, 7.5 points. And then for a win, you're looking at about 50 ticks or so right there, about 12.5 points. And then obviously if you wait until get into the 61.8 level, then you're looking at about a 20-tick stop loss and about a 60-tick win right there for it. So that's why I prefer waiting down to the 61.8. Yeah, you do miss some, but the profit target is a lot better, and when you do lose, it's a whole lot less as well. So that's typically what I look for. But anyways, so what I'm looking for is getting in on the fourth wave right there, or whatever you want to call it, the LA wave, getting right there. And then when price goes up here and creates this fifth wave up here, then obviously I'm out of it and not really looking to get in again. You can look at going up right here real quick, keep dragging up higher to when price comes down and hits that 38 level. You can see it came down and hit it right here. So you could do some scalping right here. It is something I'm looking at, but I'm just not confident in it, so I do not do that right now. But I do not look for price come back up here, going back up and hit the 1.416 level again, just because a really nice L8 5-way to hit. Doesn't mean it could not go up there and hit, and that would be the true fifth leg of it, but it's just not what I'm looking for. So I know it's a little bit sidetracked, but just want to explain what I look for when I'm trading here real quick. So as price had it last week, again, it's pretty much just a range day right here. And then the reason why I look for the daily high and the daily low is because a lot of the times you can see where the kind of stopping point is going to be for the next day, because here using the previous day's high, previous day's low, you can see when price just crashed back down here on Friday at about, what time is that, 3 in the morning right there. It looked like it's just going to keep on going low, but really what that was just 1, 2, 3, 4, 5 wave move down right here. And look at the stopping point right here in this little target zone between the 1.416 and the, actually I need to change that one up here real quick. I like using the 1.272. So the 1.416 Fibonacci extension level, and then the 1.272 Fibonacci extension level as well. Just a little target area. See, it stopped right there, and the price came on back up for it. Now, does it work that way all the time? No, it does not work that way, but it does give you a good target area to look for when price is breaking out of the previous day's highs and low. Like if you look at this right here, obviously it did not. That was not the stopping point. It did see the previous day's high right there, previous day low right here. Price did come up, hit it, waffled around in it, and then shot up. Looks like it was going to take off the rest of the day. And then kind of when the market opened around here around 8:30 Central Time, U.S. Central Time right here, you can see it created a 5-leg Elliott wave move down for the rest of the day during the U.S. session. But if you want to look at this for the target on the other way, look at this. Lo and behold, using the previous day's high and previous day's low, look at that, hit right there in the target area. So basically what I'm looking for is all these little pieces I can put together that helps me trade and helps me stay on the right side of the trade. So far, that's where I'm at, and that's the number one way I'm trading right now. Nothing has really changed from the beginning where I'm looking for these retracement type of trades. If you're looking for a lot more in-depth stuff for it, there's a guy, he goes by the name of E-mini trader, or E-mini addict, sorry about that. And I learned a lot from him as far as how he draws his Fibonacci extension levels for the ways he trades. I don't trade the way he trades, obviously, but I feel he's he does a very good job explaining it for the way he trades. So, I do recommend him if people are looking for someone to help draw their Fibonacci extension retracements a little bit better, or at least get another viewpoint, because I think the guy is legit. If you do join his trading room, it's only like $30 a month or something like that. So I mean, he's not one of these people charging you $2,000 to learn his bullcrap system. But anyways, I just recommend him. I get nothing from it, but he is someone who helped me out in my so far in my trading journey. E-mini addict. Just Google that, and his website should come up. But anyways, looking at moving it forward here to beginning of next week, I think there's a possibility we're going to see some downside in the market, and I'll go to the daily chart and weekly chart here and explain why in just a second. So if we are going to look at that, starting off here on Monday, then we're definitely looking at the market coming down in between about the 33.45 to 33.41 range right here. So that is something that I will be looking for if there is going to be some weakness to open up here on the shorter term time frame for the market. And then let's go to the daily chart here real quick. Let me explain why. Looking for that. Let's get rid of that. Don't need that. Don't need that. All right. So looking at the daily chart right here, You see, and then these blue lines, all these blue lines right here, is those signify either the pivot point high or the pivot point low. So obviously, if we're going high and I'm dropping my Fibonacci retracement levels off of this, there's just a pivot high right there. There's another one. There's another one. There's another one, and then coming down right here, there's a pivot point low right there, and there's another one right in here that I didn't draw. But that's all that signifies. So last week, as you can see right here, price came up. We hit the target area. Let me show you what it looks like for that. There we go, that and that. So hit the target area, and again, the target I'm looking for is the 1.416 Fibonacci extension level. So hit it there, about 33.14 or so. Hit it and has continued to move up slightly there ever since. Now, one thing to note, it has hit the target area, and then the MFI, which is the money flow index, and what I use this for is just a general barometer to see where price is in relation to how the market's moving. It's slightly in the overbought area. That doesn't mean that there's going to be an immediate or imminent drop in the market, but it can signify that it is. So when prices sit in the profit target level in a fifth wave in an Elliott leg, plus the MFI is overbought, that's what I'm looking for, it being bearish week this upcoming week, or at least to start out the week here in the S&P 500. And then the area that we would look for, or I'm looking for the market at least to come down to, now it can of course move lower, but the area I'm looking for is, let's draw this up here and move this Fibonacci retracement level down there. So the first area we're going to look for right here is going to be about the fourth point of the Elliott wave right down here. We're going to look for price to retrace down here. So I am looking for price to retrace down sometime in the next week or two down to about the 29.60 level area, at least down there. But then also there is a very good chance that comes down and hits the 50% retracement level down here at about 27.96. So I am definitely looking for weakness here in the market here in the short to kind of intermediate term here in the market. Again, looking for kind of the fourth point area right here, which also lines up perfectly with the 38% level of this overall Fibonacci retracement level for the S&P 500. Down here to around 20, we'll just say 29.20. I'm looking for about 29.20 area. And then also it may not be done. It could come down and hit the 27.91 area. So that's kind of the area I'm looking for price retracing down again to about 27.96. Or up to at least 29.21 for the retracement from this move right there. And then from there, it definitely could continue up for it, but I am looking for a retracement move back down here in the S&P 500. And then let's go up here to the weekly chart. And as you can see right here in the long term of the S&P 500 futures, one thing I do need to add, I don't know if I've talked about this since I started really looking at this 508 Elliott move, applying it to my Fibonacci retracement and extension levels, is I did reduce my target for the S&P 500 that I was looking for. I was looking for, I think, a little bit north, around 4,000 or so. So dropped it down to about 36.87 based upon the new target that I have for this level. In fact, let me change the settings to right there. Yes, that's why. Before I was looking for about 39.40, so closer to the 4,000 level, but now I'm looking for a little bit lower to between about 3,600, 3,700 level. So we'll just say around 3,700, 3,650 for this move if it does come up and complete. But as you can see from this Elliott Wave 5 move that we have down here, started way back down here, and I'll tell you what, let me just show you how I came to this conclusion up here. So price using this swing low right down here, go up, there's the pivot point high, price came back down. As you can see, let's zoom in a little bit more. Price came back down, hit the 38% level, so that locks it in right there. If price goes up and hits the target, which it did right there, then that could be potential first wave right there. So it did that perfectly right there. Then we keep on driving it up. Okay, there we go. Here's the next one. Price again came back down and hit the 38% Fibonacci retracement level. So that locks that one in there as one there as well. But then after that, you can see as I'm dragging this up, price isn't coming down here and hit this 38% level. So when price doesn't do that and you're going up a good bit for it right there, usually what I look for is price at least coming up and hitting around the 200% Fibonacci extension level right there. When price hasn't pulled back and hit the 38, then we're definitely in a, or not definitely, but most of the time we are in the extension move for it. So that's when I go ahead and drag my pivot point low up to the last pivot point high from the last retracement move that we had. And then I just continued to follow this up right here. So as you can see, we had one right here, but price continues to just blow it out, go up, go up, go up, and here we go right there. This was around the last election time, I believe, when President Trump was elected. I think that was that? No, never mind. That wasn't it. I'm not sure what there was election. I don't know. These are the weeks. Oh, it's not important. But anyways, there's a lot of a lot of craziness going on in the markets. And then so came down, hit the 38% level right there. So what I was looking for that, since that's definitely a lot bigger move than that, than the one leg. There's the three wave right up there. I labeled that as 3-wave, but I thought this was going to be the 5th wave, but nope, I was wrong right there. Price continued to just go on up some more, came back down, hit the 38% level, and then went right up here, and look at this perfect target box area that it hit between the 1.4 and 6 and the 1.272 Fibonacci extension level. And then right after that, that is when all the coronavirus crap kicked in from the global pandemic, and that's when the market crashed right there. And then price came back down from this level right here and hit the 38% level. So this truly may not be this may just, if price, I'm seriously tempted, if price comes back up and hits this level up here at about 36.88, to making that the again the 3rd and 4th wave. But the reason why right now I'm labeling it as this was that wave 3, wave 4, wave 5 right there, labeling it, is price did come down, came back down to the 4th point right there, and so that's why I called it complete. It didn't, let me go show you this real quick, it did not come down and hit the 50%, which would have for sure signified that it was over. It did only hit the 38%, but since it did come down and hit the take out the 4th point right there, that's good enough for government work. So that's why I'm considering it to be completed. But there's still, of course, the chance that it continues to go back up, until we're seeing a big retracement here in the market. But definitely from this wave right over here, the one that we're in, definitely looking for retracement at least down here to that 4th wave, as I mentioned just a little bit ago, to about 2940-ish or something like that. So that's the S&P 500, a little bit of a long-term view that we were looking at right there, but just wanted to point out why I think that there is going to be retracement or weakness here in the market in the very near future. So just be careful out there for whatever is going on. Looking at the weekly chart right here, you can see the MFI level. It isn't on the overbought level right here, and then also in the monthly chart as well, you can see it's not in the overbought level as well, but it is pretty much making a double top up here so far. So just be careful out there, but I do think in the near to intermediate term, you can expect some pullback in the market, and so we'll have to see what happens after that. All right, take care out there. Talk to you later. Bye.